Something massive just flipped behind the scenes of global finance, and 99% of the world has no idea it even happened. While everyone's distracted by Bitcoin ETFs and meme coin drama, the IMF and World Bank just activated a silent update, one that rewires how money moves across borders, banks, and blockchains. It's called ISO 2022, and it's not just a messaging standard. It's the new language of money, the digital Rosetta Stone that every currency, every bank, and every crypto will have to speak to survive. And here's the shocker. Only 5 cryptos are fluent in it: XRP, XLM, XDC, Algo, and HBAR. By the end of this video, you'll understand why this isn't just an upgrade, it's a global reset in slow motion, already live, and why HBAR's role in this story might just be the biggest financial plot twist of the decade. If you're interested in this topic, hit the like button, subscribe, and type "interested" in the comments, and I will give you a heart. Yeah, volatility is everywhere right now. Markets shaking, governments hesitating, traders freezing, but that's just the noise. Beneath the noise, something far bigger is unfolding. The financial system isn't collapsing, it's upgrading. And unless you're paying microscopic attention, you're going to miss the moment the world's money quietly changes its operating system. At first glance, ISO 2022 sounds like the most boring thing imaginable. A messaging standard, some technical jargon buried in a banker's PDF, but that's the camouflage. Behind that dull label hides a global protocol that rewires how every dollar, euro, peso, and digital coin talks to one another. Imagine every bank on Earth suddenly speaking one universal language. Data-rich, automated, instantaneous. That's what ISO 2022 does. It doesn't just change messages, it changes how value moves. For decades, banks relied on Swift MTE, a clunky, outdated 1970s telex system patched together with duct tape. Each country, each bank, each clearinghouse had its own dialect. Money crawled through the system like a fact. Delays, errors, lost transactions, all just part of the process. But in a world where AI trades at microspeed and blockchain settles in seconds, that old code became a liability. Enter ISO 2022, a data-rich, machine-readable standard designed for speed, compliance, and traceability. The IMF calls it the foundation for next-generation payments. Translation: the nervous system of digital money. Every major economy is already shifting. Swift began its migration in 2022. Full compliance is mandatory by 2025. The US, Europe, China, Japan, all of them are integrating this new framework. When it's complete, money will no longer move through fragmented pipes. It'll flow through a single synchronized network capable of carrying every detail, who sent it, why, and what asset backed it in one clean packet of data. That's not just efficiency, that's power. Because with ISO 2022, the IMF and World Bank gain something they never had before: total visibility. Each transaction can include metadata, the sender, the receiver, even the purpose code. Regulators won't need to chase money. They'll watch it in real time. It's transparency for them, surveillance for everyone else. And that's why the world's biggest institutions are embedding it quietly into every project they touch. The World Bank's digital infrastructure initiatives in Africa and Asia, the IMF's CBDC policy frameworks, all of them speak ISO 2022 fluently. So here's where it collides with crypto, because if the world's financial backbone is changing languages, only the assets that can speak that new language will survive. Out of tens of thousands of tokens, 5 already do: XRP, XLM, XDC, Algo, and HBAR. These aren't memes or moonshots, they're bridges, the translation layer between the old world of banking and the new world of tokenized finance. Think of XRP as the liquidity engine, Stellar as the inclusion network, XDC as the trade finance backbone, Algorand as the programmable policy chain, and Hedera HBAR as the enterprise trust layer. Together, they form the digital skeleton key to ISO 2022. The World Bank doesn't publish buy lists, but its reports repeatedly reference these very frameworks. Interoperability, settlement layers, green finance, and tokenized trade, all matching what these 5 were built to do. So when someone tells you ISO 2022 is just an upgrade, remind them. This upgrade forces every major financial institution on the planet to rebuild its infrastructure around it. Swift's old system handled around 40 million messages a day. The new one will handle hundreds of millions, all standardized, auditable, and ready for programmable money. And as this rollout continues, the rails connecting central banks, fintechs, and digital asset platforms begin to merge. This isn't theory anymore, it's live. The Swift pilot migration is complete. The first isonetic payment messages are flowing, and the same code that powers those payments is now being tested inside digital currency sandboxes run by the IMF and World Bank. When the world's most powerful financial bodies start rewriting their systems, it's not a trend, it's a transition. So the question isn't whether ISO 2022 will replace the old world, it already is. The real question is which networks will carry its weight when every transaction on Earth runs on these rails. Keep watching, because in the next part you'll see exactly how those 5 coins were chosen, what role each one plays, and why HBAR's position might be the smartest, stealthiest move in crypto right now. Now that you understand what ISO 2022 really is, not a code update, but a total financial language reboot, let's talk about the 5 networks that already speak it fluently. Because once this new system goes fully live, every digital asset outside this circle becomes a foreigner in a world with one universal tongue. Let's start with XRP. For years, critics called it too centralized, too corporate, too cozy with the banks. But guess what? That's exactly what the banks wanted. Ripple didn't fight the system, it studied it, mimicked it, and then built a bridge that regulators could actually trust. When the World Bank's reports talk about liquidity optimization for multi-currency settlement, they're describing Ripple's entire playbook. XRP is built to move value between currencies instantly, without friction, without Swift, without waiting days. It's not anti-bank, it's post-bank. Then there's XLM, Stellar, Ripple's younger, friendlier cousin. If XRP is the Wall Street handshake, XLM is the street-level conversation. It focuses on inclusion, getting money to the people who don't even have a bank account. It's partnered with MoneyGram, Circle, and even several central banks experimenting with retail CBDCs. When the IMF says digital inclusion is the cornerstone of sustainable finance, that's Stellar's entire mission statement. While the world debates crypto adoption, Stellar is literally wiring remittances across borders in seconds. Now XDC's the quiet workhorse. Hardly anyone on YouTube talks about it, yet it's sitting right at the heart of trillion-dollar trade finance. The world runs on letters of credit, shipping invoices, and bills of lading. XDC's network is tokenizing all of that. The actual documents that move goods from ports in Singapore to warehouses in Chicago. The World Bank's International Finance Corporation oversees those global trade flows. XDC is building the pipes underneath it. It's ISO compliant, hybrid, and already testing smart contract-based trade settlement systems. If XRP is liquidity and XLM is access, XDC is infrastructure, the boring, essential kind that keeps the economy breathing. Next, Algorand, or Algo, the darling of academia and regulators. You could almost call it the policy-friendly blockchain. The World Bank literally issued tokenized green bonds on Algorand's network. It's sustainable, carbon negative, and backed by pure proof of stake. 3 phrases that make regulators smile. Algorand isn't chasing hype, it's aligning with the new financial ESG narrative. Efficiency, transparency, and compliance. When central banks talk about programmable money or smart fiscal policy, Algorand's architecture is what they're picturing. It's not a coin, it's the rulebook coded into the system. And finally, HBAR, Hedera Hashgraph. If the other 4 are gears, Hedera is the frame holding the entire machine together. It's the most institutional, most enterprise-ready network in the mix, governed not by anonymous validators, but by a council of global heavyweights: Google, IBM, Boeing, Standard Bank, and even the London School of Economics. These aren't crypto influencers chasing views, they're the same institutions that keep the global economy running. Why would they join Hedera? Because its design screams legitimacy. Hedera's consensus isn't blockchain in the traditional sense. It's a hash graph. Faster, more efficient, mathematically secure, and capable of finalizing transactions in seconds with near zero fees. It's already being used for tokenized deposits, stablecoin infrastructure, and verifiable credentials. The kind of tools governments and corporations can legally use without touching volatile chains. In an era where compliance and traceability rule everything, Hedera doesn't just fit the mold, it defines it. This is where the dots start connecting. XRP handles liquidity, Stellar handles inclusion, XDC manages trade, Algorand covers policy, Hedera anchors trust. Together, they form the invisible architecture of the ISO 2022 ecosystem, each one filling a role that the IMF and World Bank have been publicly describing for years And while retail investors argue over which meme coin will 100x next, these networks are already being woven into the fabric of the new financial system. The migration is underway. SWIFT is already halfway through its full ISO rollout, with complete adoption expected by 2025. Every central bank testing a CBDC is aligning its systems to match. The IMF's pilot frameworks literally mention ISO 2022 compatibility as a requirement. Translation: if your network can't speak this language, it won't be invited to the party. So when you see the headlines, IMF launches global payment sandbox, World Bank tokenizes bonds, SWIFT expands cross-border pilot, don't just scroll past. Those aren't random tech tests. They're breadcrumbs leading to one conclusion: the rails are being rebuilt. And the cryptos sitting quietly inside that infrastructure, they're about to become the default translation layer of global money. HBAR's position inside that equation is what makes this moment so explosive. Because while XRP is already fighting regulatory wars in the open, Hedera is doing its work behind boardroom doors, building relationships, compliance framework, and enterprise use cases that most investors won't notice until it's too late. In the next part, you'll see how the IMF, World Bank, and major financial players are already flipping the switch, and how this single upgrade could trigger the largest liquidity migration in financial history. By now, you probably realize this isn't some theory. It's already happening. The switch is being flipped in slow motion. SWIFT went live with ISO 2020-22 messages in 2022. By 2025, full compliance becomes non-negotiable. Every major economy, the US, the UK, the EU, China, will be on the same digital rails. That means every payment, every asset transfer, every bank-to-bank message will soon speak one language. And here's where things start getting very real. Because this migration doesn't just affect banks, it affects liquidity. The flow of value itself is being redirected. In the old world, money traveled through isolated systems. SWIFT for banks, Visa for payments, Fedwire for settlements. In the new world, everything becomes interoperable. Cash, crypto, CBDCs, all sharing the same communication layer. And that communication layer runs on ISO 2020-22. Now think about what that means for the 5 compliant cryptos, especially HBAR. When the rails go live, liquidity will only move through approved corridors. That means networks that are fast, auditable, carbon neutral, and fully compliant with regulatory standards. Hedera checks every box. Its transactions finalize in seconds. It's green, scalable, enterprise ready, and governed by companies that regulators already trust. When governments and banks start tokenizing real-world assets, from oil contracts to carbon credits, Hedera is the sandbox they can legally play. But this isn't just about technology, it's about control. The IMF and World Bank aren't reinventing finance for fun. They're building a synchronized system that gives them total visibility. With ISO 2022, every transaction carries metadata: who sent it, why, and what it funds. Combine that with blockchain's immutability, and you get perfect traceability. A financial panopticon. It's the end of shadow money, but for investors who understand how to position themselves, it's also the beginning of a new wealth cycle. Because when this switch flips, the money won't disappear, it will migrate. It will move from legacy rails into networks that already speak the new language. And here's the catch: that migration won't happen slowly. It'll happen overnight, just like when the internet replaced fax machines. One day it's the future, the next day it's the standard. So let's talk about timing. The IMF's digital currency roadmap, the World Bank's 2025 digital infrastructure agenda, and the G20's financial stability reports, they all converge on one date: 2025-2026. That's when full ISO compliance becomes mandatory. That's when the new financial operating system goes fully online. And it's no coincidence that this timeline aligns with every major CBDC pilot, from the digital euro to the e-naira to the digital dollar. The rails are being laid, the nodes are being tested, and the liquidity corridors are being mapped, all powered by ISO 2022. While most of the crypto market still chases hype, meme coins, ETFs, halving cycles, the real game has already shifted. This isn't about rebellion anymore, it's about integration. The institutions that once fought crypto are now absorbing it, shaping it, embedding it into the machinery of global finance. The rebels who learn to speak the system's language become the new architects of it. XRP, XLM, XDC, Algo, and HBAR aren't outsiders, they're insiders who got there first. And here's where HBAR's role becomes undeniable. It's not fighting for attention, it's earning trust. When the World Bank tokenizes carbon markets, when banks deploy digital identity systems, when governments pilot smart contract settlements, they're doing it on networks that can guarantee data integrity. That's Hedera's core design. Its Hashgraph consensus isn't about hype, it's about audit-ready transparency. That's why it's quietly powering courts in Dubai, tokenized oil funds, and enterprise-grade ESG projects across the globe. You don't see it trending on Twitter because it's trending in boardrooms. But let's zoom out. The ISO 2022 migration is not a crypto event, it's a civilization event. It's the moment money itself becomes programmable, traceable, and interoperable across borders. The last time something like this happened was when the world moved from gold to paper. The next leap is from paper to code, and you're living through it right now. When people finally realize what's unfolding, they'll call it the Great Reset, but by then, it'll already be done. Liquidity will have shifted, markets will have repriced, and the only assets thriving will be those aligned with the new rails. XRP as the bridge, XLM as the connector, XDC as the engine, Algo as the regulator's darling, and HBAR as the backbone, holding it all together. So here's the truth. You're not early to crypto anymore. You're early to the next financial era. The one the IMF and World Bank are quietly constructing beneath the headlines. The one where ISO 2022 isn't a rumor, it's the rule book. And HBAR, it's the chapter on trust. When the migration finishes, there will be two kinds of investors. Those who panicked at the silence and those who prepared for the switch. The silence is ending. The switch is here. So if you're watching this right now, type "all ready for the reset" in the comments. Because this isn't just another market cycle, it's the rewrite of global finance. And those who understand it today will own tomorrow.